Mortgage rates moved slightly lower on Thursday, July 23rd, 2026, giving home buyers a small break after Wednesday's sharp increase. The average 30-year fixed purchase mortgage fell to 6.514%, while the 15-year fixed rate dropped to 5.826%. The 5/1 adjustable rate mortgage also declined to 6.336%. Even with this modest decline, rates remain high by recent standards, keeping monthly payments elevated. For example, a $425,000 home with 20% down would carry a total monthly payment, principal, interest, taxes, and insurance of about $2,677. Smaller rate changes may seem minor, but they can make a noticeable difference over time, especially on larger loans. Fixed-rate mortgages keep the same interest rate for the life of the loan, offering predictable monthly payments. Adjustable rate mortgages start with a lower initial rate and adjust later, which can provide short-term savings, but introduces the risk of higher payments in the future. Buyers should consider how long they plan to stay in the home and their ability to handle potential rate increases before choosing an ARM. Mortgage rates respond to broader financial and economic conditions. Factors like treasury yields, inflation expectations, energy costs, and Federal Reserve policy influence long-term borrowing costs. While the Fed doesn't set mortgage rates directly, its actions affect investor demand for mortgage-backed securities, which in turn impacts the rates borrowers receive. Refinancing may be worthwhile when it meaningfully lowers your monthly payment or reduces total interest, but the decision depends on your remaining loan balance, closing costs, and how long you plan to stay in the home. Calculating the break-even point helps determine whether refinancing makes financial sense. High rates mean affordability is a key concern. Buyers should compare multiple lenders' offers, including APR fees and points, review their credit, debt-to-income ratio, and down payment options. Consider mortgage points or temporary rate buy-downs if financially feasible. Choose a payment that remains manageable after taxes, insurance, and maintenance. Thursday's small rate drop provided some relief, but the mortgage market remains elevated. Borrowers need to focus on their personal financial situation, compare offers carefully, and make informed choices based on total housing costs, not just the interest rate. Even small differences in rate or incentives can add up over time. Our specialty is assisting you in easily obtaining the finest loan available, offering professional advice to help you reach your real estate investing objectives stress-free. Contact today for a tailored consultation where our expert advice turns potential into profitable reality.